Yo, what's going on, guys? Welcome back to another recap. Today we're going to cover the trade I took on NQ. So let's get straight into it. First things first, here are the accounts. I got about 1.8K across 5 select accounts of Tradeify. These are the evals I mentioned in the last video. As you can see up here, they're about a third of the way past. As I mentioned, going to just be, taking lighter size on these, looking to take, 1 to 2 trades, pretty much just compound through these, start to get some more consistency back. And then, we'll start putting back more size again. But let's get straight into what we saw coming into today. So coming into today, this is the 4-hour candle that we were currently on. So we hadn't yet taken out, any sell side draws that I have marked out yet. So we're going to cover what I saw beforehand. So first thing I saw was this 4-hour gap right here. And you can see we have an SMT marked out at the bottom right here with ES. And I saw this 4-hour gap. Now, obviously you would anticipate this 4-hour gap to hold, push us bullish, which, it did in the end. So basically I saw we inversed this bearish 4-hour here. We left behind a bullish 4-hour and, we were holding respect towards that. Now scaling down to lower time frames here on the hourly. There was really nothing on the hourly for me that was really standing out. It was really just 4-hour structure and also the lower time frame structure that kind of made more sense to me today. The hourly, this candle hadn't printed yet, so we're kind of just seeing this range here. So at this point here, I'm really just looking for some kind of AMD, some kind of a manipulation move, and then some distribution move basically. So we have this range high here, this buy side level, and then we have obviously London as your range low, your sell side level, right? So top and bottom of the range, we're just looking for one side to be manipulated, and then ideally we can look to play the other side. Now, typically I'll play, either the manipulation move or the distribution move. If the manipulation move gives me a, clean setup, I'll take it. And, that way I don't even have to look for, the reversal back the other way. So let's go ahead and lower our time frames now to the 15-minute where I actually took my entry today. So I took my entry on the 15-minute time frame today. When it's very clear, you want to, take it on any time frame that's presented. Obviously, you guys will see me usually take lower time frame, like, a 5-minute, 1-minute trade. But, today, this was a very standout trade to me, and I'll explain why. So obviously now the indicator does not have the SMT populated, but at the time of pre-market and, before this trade had happened, we did have an SMT at these overall range highs here with ES. So at that point, we did have divergence in the market signaling we wanted to go lower. And that would also entertain the idea of lower being our manipulation move to then move higher. So basically, I see that. Now, I don't talk about this confluence much, and I don't use this confluence much, which is why I don't talk about it. But we make this SMT. So this is a valid rejection block. And the reason why this rejection block is valid is it swept out a key buy side level or sell side level. In this case, it was a buy side level we swept out, right? This range high. We made an SMT there. So now we can potentially use this candle here as a rejection block. Now, typically, you'll see people like Powell or other top takers, limit order this consequent encroachment or 50% of that wick, stop at the top of it, targeting, sell side. But for me, I like confirmation, continuation. So I wait for the confirmation that this rejection block is valid and that this SMT is holding. So with that, I waited for this 15-minute gap that we had right here, as you can see. And I waited for that gap to be inversed. And I took my entry, I think maybe about 30 seconds before this candle closed. On a higher time frame, when you're that close to the candle close, you're typically not going to just see this candle spike back up and not close to this gap. So it gave me a slightly better entry by just, maybe a few points. So, maybe not worth, but this candle could have very well closed, an extra 10 points lower. So, I got a pretty decent entry on this. And, usually I would like to run a stop, at the inversion high here. So at this mid candle here, at the high of that candle. But I wanted to run my high this protected stop for today because this was a very, very clean setup. And I didn't want to get, retraced on, get, wicked out. And then this protected high ends up holding and we go lower. So I still got really good risk to reward on this 2.5R. So this was a very solid entry regardless. So let's get back into, the criteria. So we have the SMT at the top. We have this rejection block now that we are, respecting very nicely. We make this nice top wick on this candle, pretty much V shape, in the opposite direction. We now have this 15-minute inverse. So now you have your entry trigger. So that's the entry trigger, right? So now you have that. And then our break even was very simple as well. right? We have this internal low, right? Seems like a tight break even, but if this inverse is going to play, we typically don't want to see retraces. We want to see this inverse close, and then we want to just see delivery down towards our draws on liquidity. So once we tapped into that internal low, I went ahead and went break even. You can see we just, flushed through the low, continue to deliver lower. Typically I would go for, this internal low here on the range. But if this is going to be, true AMD, you can expect, the full range to be manipulated. And on top of that, London lows along with these internal lows can be considered, low resistance liquidity. So it's a good area for us to actually manipulate down towards. So I went ahead and actually took the bigger TP, which ended up giving about a 2.5 R. And then you can also see prices and clear displacement. So, in that case, it's very worth holding. Now, if we're kind of like grinding towards sell side, we're not really displacing with volume. You would be better off taking off right at this sell side draw here, kind of at these, equal lows. But today it was kind of clear that volume was, favoring us to go and manipulate down through this London low. Now, you can also see here, I have marked out to the left a very small 1 hour fair value gap, right? Now, obviously the market came, far past that. But you can see we ended up making this SMT down here. ES took out previous day low. So that is your manipulation. Now the manipulation move is now complete. Obviously, I very well could have held this down to previous day low, maybe. Yeah, I very well could have held this down until ES took previous day low and then closed the trade there. But honestly, I didn't really expect us to just plummet down all the way to previous day low without a retrace. These two draws being low resistance makes sense that we just, fully deliver. But then I kind of expected once we're down past here, we might give like a retrace before another run. But ultimately, ES ended up just flushing through, took out previous day's low. And then we formed a reversal. Now we'll kind of go over, what we could have taken as a reversal today. I didn't play the second trade. Yesterday I took 2 trades. Today I just took 1. I just like this trade, very clean trade, very good risk to reward. Obviously I didn't put a lot of size on, so it was a 1.8K across 5 accounts, but still a very good trade just to take a one and done. But the reversal was very nice. We'll kind of cover that. Let me get rid of some of these markings here. So this reversal was very clear, right? At this point, I know the indicator. Okay, there we go. Populates. So we have that SMT down here, right, at that previous day's low. At this point now, in this area, you're kind of waiting to see, okay, do we want to continue flushing lower, right? Do we flush past London, or do we end up coming back above it and building, volume and displacement back above these, sell side levels we just took out, right? Because that would then confirm that we can be in reversal. So an entry you could have taken today, obviously this candle here, very strong candle. You do have like a very wide stop on this, but in my opinion, you just have to lower contract sizing. That's all you have to do. When you have conditions like this, you are going to have wider stops. So you just lower contract sizing in this case, but this is a very good entry. And then you can see here, we ultimately come up inverse through these gaps here, right? We have one gap down here that could have very well held to go to previous day's low. So that got invalidated. Then you now have another gap above right here that also got invalidated. And then this, leg down becomes, an order block or a CISD at that point. So, you have a very good entry here. And then you have a clear draw above being these range highs, right? So if this is going to be AMD, like I mentioned before, we're going to sweep out the range lows, London lows, and then we're going to flip back up to go for the range highs. Now, ultimately, we ended up flipping back and going all the way up for previous day high, which is cool. We completed the buy side model, and now you can see we're kind of just grinding without volume. But, this is a very good long entry to take. And again, I would have taken this if I was open to taking more than one trade for today. But as I mentioned, that trade that I took down was very, very clean, and I was able to be done by 9:31. So no reason for me to continue looking to put risk on. Yesterday made an exception for it just because I put on a little lighter size than I wanted to in the first trade. So today I actually put on size that I wanted to. I'm comfortable with that size. So yeah, that's a long entry could have taken. And then, for some more sauce, today I do want to kind of, break the market down a little bit more, kind of drop some tips, for my continuations. I am going to end up making a video at some point about my entire continuation model and just how I, trade my discretionary model. It's really discretion based. And then I kind of just align these concepts towards it. So we'll kind of break down another concept that I like to use sometimes. So typically when we get a leg down and then we get a leg back up, you can take your retrace tool out and you can kind of see, you know, where 50% is, where our OTE levels are, golden pocket, etc. Right. And then with that, you know, you typically want to align confluences to kind of give you conviction that, you know, those levels can potentially hold. So today on live, I called out, you know, when we were up here, I called out that we were super extended, obviously, off this reversal. It's very possible we get a retrace before going higher into the next draws and liquidity. You're not going to usually just see price, you know, come down, reverse, and just continue, you know, blasting off without some form of a retrace. So that's what we got today. So let me go ahead and kind of break this down. So if we go to your 5-minute time frame here, right, you can see where equilibrium is marked. We have a 5-minute fair value gap right here, right? So we have a bullish 5-minute fair value gap sitting there, right? Pretty big fair value gap. So I mentioned this on live as well. This fair value gap, I believe, is about 90 points wide. Very big fair value gap. You don't want to limit order at the top. You don't want to limit order CE either. You want to see, you know, do we have levels that are inside of that fair value gap to potentially work off of, right? So now we have this fib tool, right? We take the bottom to the top and take, you know, our retrace levels. Here we have 50% of this, you know, leg up, right? Ideally, if price is truly bullish, we want to see 50% of this leg up, you know, hold and then, you know, provide continuation into the next draws on liquidity. So in alignment with this 5-minute gap and equilibrium as well, we have this nice 1-minute gap also, right? Now, in terms of entry out of this 1-minute gap, it's a bit, you know, a bit funky in my opinion, because this very well could have been a break-even trade. Me personally, honestly, I probably would have taken something like this right here, putting stops here, and really just targeting back to high of day due to like the RR, right? You're getting 2.2 RR here. You're getting 100 points. And at this point, you know, we're still pretty far from these draws. But like at this point here, hitting equilibrium of this range should start us moving back towards these draws. So just better off targeting low hanging fruit, which would be something like this here. Now on this trade, the reason I do say we might, you know, end up getting break even is because ideally I would look to be going break even somewhere at this internal high, or I'd be looking to go break even if we close through, you know, this gap in the leg right here. So we inverse this gap, right? So, you know, that's a really good break even spot, because now, you know, if price is pushed up in this area, and we've inversed this gap, you just want to see continuation of price. You don't expect, you know, another retrace. And you can see we kind of come back down, stall a bit. You would have got break even, and then it delivers to your draw. That's just variance in trading. And then at that point, you know, would be very hard to find re-entry, because we come up and then we starting to, you know, chop, and then there's really no solid entry up to the draws and liquidity in my opinion. But this was, you know, another decent area to take along. If you didn't go stops break even, obviously you would hit. But for me, I would have went break even stops. You know, we came up we came up 60 points from entry. Good area to go break even, just based on displacement, not really based off levels. You know, the only level is just this inversion. If this inversion is going to validate and we're going to truly continue higher, we shouldn't flip back down below it. And you can see, you know, that's what we ended up doing. You know, the only other re-entry I could see, but again, becomes a bit risky, but this was a little cleaner, would be something like this. So I don't like this candle here, although we inverse, but I don't like how this wick forms. So I'd rather see more confirmation. I like this close here. So I would really just run, honestly, something like that there. And then you can run your TPs up to here, right? And again, I mean, yes, this is all in hindsight, but these are very, you know, valid entries, right? You have a good break even area at this high of day here, go break even here. And then at that point, you can literally walk away and let your trade run to TP. Obviously, we chop for a good amount of time, but the draw at this point is very clear, right? We very well want to at least come into these previous AM highs, and then we have previous day high right above it, which again got met, right? And this trade, if you would have held the previous day high, you would have got chopped around for a bit, but you still would have been, you know, hitting TP. And this is a 2R, right? This is very clear displacement, right? We're still holding this bullish area. This area is still bullish until flipped. So, you know, this is, you get wicked out break even, but what we do is we end up coming back above this candle, right? And I'm dropping some sauce. This video is going to be a little bit long, so apologies for that. But this candle, right, that we initially inversed up and then, right, close back down below, we end up, you know, flipping back above that, aligned with, you know, flipping this gap, which I'll just mark out in black here. So we end up flipping this gap here, flipping back above this gap as well at this point, right? Clear displacement candles higher, right? And then you have a clear break even at this spot here, right? At this point, you know, we kind of engineered a high, made some low resistance, right? So this is a pretty decent re-entry. You have a good, you know, stop, right? This should be protected lows now off of this retrace. if you want to use your fib tool, again, I'm sure we retrace into a decent area as well, right? Came into 0.618, so OTE level. So, I mean, this is another good re-entry spot to take. And I mean, it's really just displacement based. My continuations that I use are all displacement based. So in here, you can see the candles are not as strong, but this entry is still valid, right? And again, for risk to reward purposes, this is, honestly valid to take. It's over a 2R. Same thing with this as well. But you can see here how the displacement is far clearer, right? This retrace, we get clear displacement, flips above bearish PD arrays. We reclaim these PD arrays that got flipped back bearish, etc. And then you get delivery to the draw. So, I mean, today was kind of a textbook, pretty clean day for continuations. Obviously, we've seen some very choppy price action recently, but for continuations today was pretty clear. And then this is also ideally the framework that you want to see, in a proper moving market, right? So AMD profile, we have a range coming into the open, right? We have London lows, we have a range high, right? Today, come down, take out those London lows, form SMT at the bottom with previous day low, right? We have this hourly gap overlapped with all of that, and then, flip back above, forming continuation. We had a small 15-minute gap in here, form continuation, tapping that gap, respecting it, and then pushing up for the highs, right? So that's just like in a general sense. And then we go to the lower time frame to break it down, take more precise entries. But I mean, yeah, that's pretty much, a detailed breakdown. Some sauce dropped in there as well. Some confluences that I use on a daily basis for my continuations. It's simply really just using draws on liquidity, pairing those draws on liquidity with, confluences that are validated in the market, and, validating confluences. We'll talk more about that in further videos. But, that's really it. My trading is very, very simple. I'm not incorporating things like propulsion blocks and all those, other, over exaggerated confluences. It's really just using, imbalances in price, liquidity levels, opening prices, equilibrium levels, right? Retraces, new week opening gaps as like voids in the market where we have, liquidity voids is literally what it is, where, there's orders trapped here. We're going to obviously go for that. And you can see price, right, comes into this literal void here, and, we start to stall. So it's very simple things like that. I don't really use rejection blocks, but in times like this where it's pretty clear, right, that this is a valid rejection block, I will utilize it. And you can see today, I mean, it was very, 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 very valid. But yeah, I mean, that pretty much breaks down the market for today. There were basically a few trades you could have taken. You definitely could have taken nice shorts. You could have taken this very nice long, could have taken a good long out of this retrace. Like I said, you would have got break even if you took a solid entry here. You definitely would have gotten break even, and then you would have gotten a nice solid re-entry here on these continuation candles. And then anything past that point, past this entry to these TPs, you would have, not been looking to take anything else. You wouldn't be looking to see further expansion of previous week's high because, look how far we've expanded in price, from the bottom, right? Almost 400 points. So, price is going to start stalling. We're going to start seeing less volume. Maybe when we get into, PM session, we might see another manipulation down and then another distribution move up into previous week's high. And that can very well, be a manipulation for the week, right? That could be high week. We could sweep out this previous week's high, maybe rebalance into a 4-hour gap, something of that nature, and then end up coming back down for all this liquidity that we built up. But that's like pretty much it for the day. That's a lot of sauce, I feel like, for you guys. This is an 18-minute video, almost 20-minute video, so definitely a lot of sauce in here for you guys to use. Hopefully it makes a lot of sense. Again, you guys can leave your recommendations in the comments. But as always, if you guys enjoyed this video, be sure to leave a like, comment, subscribe. This is back-to-back videos that I've made, so I'm going to be trying to stay very consistent, at least making one video a day. And yeah, so I'll see you guys in the next video, and peace.